Hey guys, Steve Ferguson here, your modern mortgage loan advisor. Today we're going to talk about rates now that Trump is in the office. And what everybody wants to know is, have interest rates peaked? Let me tell you what, I'm going to tell you the exact process that should happen over the next 12 months. And in my opinion, I'm not sure that we're there yet, but let me explain. So let's get started. Trump's now taken office, and what he's doing is he's using his pen to fight his battles. And he's signing things into law in a very short amount of time that will absolutely influence interest rates. Border security, different things for people that came here illegally, all those things that he's putting out there time and time again are going to have a trickle down effect on the interest rate market, on bonds, etc. So let me explain. For Trump coming in, most people believe that he's going to bring in a stronger economy over what we had when the Democrats were in office. I don't disagree with that. I think we're heading in that direction. So what that means is a lot of people had their money parked in bonds because it was safe during the Biden administration, because they weren't sure about the economy and weren't sure if it was going to be strong. But as Trump takes office and moves forward in this, because Trump is a businessman, people will start to pull their money out of their bond markets and dumping them into stocks to get the quick returns. You may see it dump into Bitcoin. You may see it dump into whatever it happens to be dumping into, because people are looking for the best return possible. Now, when that happens, bonds start losing some of their liquidity, so they don't have the amount of money that they had dumped into them before. So in order to attract those investors back to them, they have to increase that bond yield to make it more and more attractive to drag people out of the market that, obviously went away when the economy, with hopes of the economy getting better. So that bond price is going to absolutely affect the interest rate on the mortgage side of things. That's going to make interest rates more expensive. Now, will it go on forever? No. So I don't personally believe that we're at the peak of where the rates are going to be. I think we're going to have to draw some people back into the bond market, and it's really going to be up to anyone's guess as to how long this is going to take. Now, my personal opinion is we're going to see a graph that's going to slowly travel up, a little bit at a time for between 4 and 6 months. So I'm thinking probably June, the peak of the buying season, July, we may be at the top of our interest rate. And then we'll start seeing it come down. I think we're going to see this curve where it comes down. And towards the end of the year, I think we're going to land at the 6.2, 6.3% interest range on a 30-year fixed note as everything gets hashed out. That doesn't mean rates are going to go crazy and they're going to go to 13%. That's not what I'm saying. I'm saying that you may see a gradual increase, and then it will start to come down and end up lower than where we are today. Now, what's important about this is we have to watch economic indicators as we continue to move forward. How strong is the economy? How strong, what's going on with employment numbers? What's going on with consumer price index numbers? Are they strong? Are they weak? So we can absolutely tell what the future may hold based on that information. The other thing is that Trump really enjoys using his political pressure to pressure the Fed. Trump loves low interest rates, and the reason for that is because it spurs buying. And house buying and selling, again, consists of about 18% of GDP in the United States. So it's really important to have people buying and selling homes, and Trump understands that. So he's going to apply political pressure on the Fed to say, hey, let's lower interest rates, let's drive down those rates. You may see them hold still for a minute, and they've already said they're going to hold for a minute to see what the economy does. But I think eventually that political pressure is going to catch up to them, and that's about where the peak of this is going to go. And then it should start coming down to normalize itself and get where everybody thinks that it should be. Now, here's the key. Right now is a great time to buy homes because the buyers control the market. That means that you're getting the best price on the product, which is the house. You can always change financing numbers later on, but what you pay for the house, you can never change. So that being said, you want to buy low and refinance when the market's higher. And the market gets higher when interest rates get lower, right? So the lower this interest rate gets in the market, which is going to be towards the end of the year and into 2026, then we should see home prices start to adjust and it become a seller's market. This means that buyers are not going to be as profitable, even though you may be saving money on the interest rate, but the price of the product, being the house, is going to be higher. So don't wait too long on this rate peak and this rate trough that we should have in the future. You've got to time it right. So if you're a buyer in the market right now, in my opinion, you should be looking, you should be making offers, you should be using your buying power because it's a buyer's market, and you don't have a ton of time on your plate, in my opinion, or you're going to have complete control of it like you do right now. So jump into the market, get it taken care of. Now, if you're a seller, it's obviously a good time to sell as well, but I think it's going to get better for you as those rates come down towards the end of the year. Doesn't mean you need to wait. There's always special circumstances where you need to sell before you can, buy, or you're getting transferred or whatever it happens to be. But that end of the year market's looking pretty solid in regards to interest rates, which is going to draw people in, which will help bring buyers to your table. And then you're more in control of it when that happens. So anyway, hope this is good information for you guys. Watch what's going on with the market. Pay attention to those economic indicators. Drop your comments below. Ask questions. I'll be happy to answer them for you and get you guys all taken care of. All right. Talk to you later. Bye.